All right, so I had enough people interested, so I'm gonna try and keep it short and as simple as possible. I'm gonna be going over how I called the low of the week on the NASDAQ down here, as well as the AMD setup I shared, because a lot of people like that AMD setup. A lot of people profited from it. So going into yesterday, we had, well, I guess since it's technically Friday now, going into Wednesday, we had relative equal highs building up here. So right here, right away, when we see these highs getting built up here, there's buy side liquidity being engineered because retail either has a zone like this here or they have their resistance level going across here and they see price tapping that over and over. They think big resistance is building, so they're going short and putting their stop losses above that high. So whenever they do that, they take it lower to induce more sellers into the market and get people out of their long positions, and for smart money to accumulate long positions, because where do they take it on this aggressive move down? So going into Wednesday, you want to be measuring from the low, from this low to the high to measure equilibrium, because we don't want to be buying above equilibrium. Anything above the 50% is premium. This is an expensive market. Anything below the 50%, this is a discount market. This is where you want to buy. You don't want to be selling when prices are cheap. You want to buy. So they take it aggressively into discount. So there was our first indicator, as well as they're taking out sell side liquidity. They're taking out sell side liquidity after they engineered up buy side liquidity. So right away, we have a range. You don't want to be shorting the range lows, and you don't want to be buying range highs. As you can see, right when we took out the range high, we went straight down. But so here, we reached into discount. So what else happens at equilibrium? That is often where you'll see turtle soups occur and reversals. So let's look at equilibrium here. We had a breaker. So I had someone ask me, how is this a breaker? Well, you got to think of these candles as lines. This is what helped me when someone had me draw out the candles. So I'm going to be referencing this drawing from this red candle here. I'm going to be drawing this move down. So this is what it looks like. We go down, and then the green candle where I'm drawing the breaker is the one up candle, and then we make that lower low, and then we displace higher. So then we fiddled around all up through here, and then just now we're finally coming back down to get the test of the breaker. So I hope that helps a little bit for the people wondering there. So we have our breaker here. And then for the most important part of this setup, the thing you always need for a real reversal, and really for any trade for that matter, is an SMT. So here we're looking at the NASDAQ on the left and the Dow on the right. So we can see here this low on the NASDAQ is this low here on the Dow. So then look at the Dow here, or look at the NASDAQ here. We rally up and then we drop down, and we did not take out this low and rallied higher. But look at the Dow. The Dow had came and took out this low. The Dow made a lower low. So right there was your SMT. That is the market tipping its hand to you right there. So why was the NASDAQ the one I chose? Well, the NASDAQ made the higher high. So that was indicating the NASDAQ was the stronger of the two. Because look at the Dow. Look how much it's still lagging behind after it made that lower low. And even during the day today, it actually didn't even catch up till after lunch. Yeah, after 1 p.m., it started to really rally and catch up, play catch up. It was the sixth sister of the three. So, as well as once I saw this SMT, if you look at the daily chart of the NASDAQ, so here was the two PD arrays I was looking at. We had a daily breaker here, as well as I was watching this daily FEG because we closed above it. Sorry. We closed above it here. So you can see we closed above it. And then once we saw the SMT, that's when I knew that this was just a retest of the FVG for higher, as we were using it as an inverse. So also look at the 50%. Look how well we respect it. I mean, Wednesday or Thursday, damn near off of it to the tick and rallied, which was really yesterday, but it's after 1 a.m. So this was really all that went into the NASDAQ setup, but there is one more thing I want to show. So the weekly FVG. So here on the NASDAQ, I just want to show how well these levels were respected and why you should have, or at least be aware of the higher time frame key levels. So here today, so we bounced on the breaker, blah, 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 and then boom, right here. We get the break back up inside the weekly FVG, rally for buy side liquidity. We hit the 50% of the FVG, which is going to be a key level for nearly every PD array. And then we get the reversal there. This is your lower time frame market maker sell model. It's a 1 minute market maker sell model back to internal liquidity. So they take out the internal liquidity. They hit the breaker here. It was a 15-minute breaker, which is also the bottom of the weekly FVG, and then they rally it. And then once we closed above the 50%, came back down, used it as support, rallied higher. So this was the NASDAQ setup and how I used the Dow to confirm the low of the week, as a lot of retail was short down here. Just like whenever I called it out and I called for the low of week down here and not to be shorting down here, I got very minimal engagement on those tweets because most people were short. So now let's move on to the AMD setup. All right, so now we're looking at AMD. So this was a really good setup. A lot of people were interested in this as a lot of people made money off of it. So let's get into it. So right away, we're looking at the daily chart. We're looking at the higher time frame order flow, because if you are trading in the direction of the higher time frame order flow, your accuracy is going to increase. If you don't believe me, then try it for a little bit and please prove me wrong. So we see that we are in a higher time frame market maker buy model because we got this move down. We take out all of these equal lows here. That is what took out the sell side liquidity. So what happened on this move down? We left all of these failed swing highs, all of these moves up, and we're just failing to take highs. That is engineering up buy side liquidity throughout all of these highs. So those are going to be targets for the way up. So what else do you do inside of a buy model and a buy program? You can use, there is tools that ICT has given to be able to fine tune the market maker model and figure out where we should see reversals or retracements from, and reaccumulation and redistribution. So measuring off the first institutional swing point from the low, 2 to 2.5 standard deviations is typically where you see reaccumulation and then redistribution, or it's a spot of reversal. So these are the two key spots to watch. So we can see right when we tapped into 2 to 2.5, we get the reaccumulation and then second stage distribution. And where to? 3.5 to 4. And what happens at 3.5 to 4? This is what often caps the range, as well as you will often see turtle soups and reversals come from here. So just like that, we see the reversal, as well as we did come up and turtle soup the high reversal. So we get the reaccumulation before redistribution on the higher time frame. Because what was this dip here though? So if we go on to the weekly chart, it looks even more clear. We have a weekly breaker right here. So right there was the weekly breaker. So the reaccumulation onto our discount PD array, and then rallies. So then, I mean, from where I caught it at, I mean, it was just an easy play. We had, as well as, so this second stage in price was also projectable. So we have an institutional swing point here. And would you look at that? 2 to 2.5, we got the reaccumulation. And now we're getting the second stage distribution higher into 3.5 to 4, which was also into all-time highs. So this is why I was expecting a move higher. So let's go into where I called it at and why I thought we were just going to go up from there. So I called it here as we were breaking above this gap, or actually, I think I even talked about it before we broke above the gap and said a close above is what will start the run. So here was the gap I was looking at. So why was I looking at this gap, and why did I not think we were going to continue lower? So looking at price coming up here, this high here is what hit 2 to 2.5 standard deviations. So this move down was our reaccumulation. And what happened during the reaccumulation? It went down and took out these lows here. So that took out our internal and sell side liquidity. So then from there, we're good to move higher. So then once we moved up here, this candle right here that closed inside the gap, it closed above this area here, which would have been your so-called breaker, a bearish breaker. But I wasn't anticipating a bearish breaker because I've said many times, when we are on the buy side of the curve, moves below old lows are going to be false market structure shifts and or turtle soups. So from here, once we had this daily close up here, this gap was the only thing left in the way of price moving up to this high and then up higher through I had these highs marked as buy side liquidity and then all-time highs. So if I just mark up right here, this was that other price target I had, which was right at 2.5 standard deviations. So what do you know happens? So they give the close above the daily or the gap, and then they give the retest. So then what happens here on the retest? They just come out with news, and then news sends it. News is not random. They give these setups in the chart in advance. News is always planned in the charts ahead of time. Always. So it's just your simple stuff, because once again here, when we move down to retest the gap here, we hadn't even taken the high yet. So this was a very textbook setup. We built up buy side liquidity. We come down, take out internal lows, and then we're good for the real reversal. So this is really all that played into the AMD setup, because this was actually a very easy play, because catching these last stages of distribution into all-time highs, these are very easy scalps or little trades to catch, rather than buying for the whole market maker model and all of the reaccumulations and distributions to hold through. You can very well just buy all of the reaccumulations and sell on the redistributions back above the highs. There's no problem doing that. It's just all about what you feel comfortable doing and what makes sense to you within price and time. So I hope these reviews helped see what I saw within price, as well as how Stocks were also setting up to reverse to the upside as the NASDAQ and the Dow was, as it was showing the SMT. There's lots of relations across the markets, as well as the DXY. It had a nice bearish breaker to move lower. And when the DXY moves lower, that puts bullish pressure on the indexes. So I hope this review helped. And until the next one, have a good one.